SoFi has been dominating the headlines with its newly released Q2 earnings. User growth is up 113% year over year, and revenues made their way up from 114 million last year to 231 million this year. 113% in user growth revenue in just a year is something that banks have failed to do for centuries. SoFi's Q2 result is rewriting the history of finance as a whole. But you can't have a celebration without a little drama. SoFi also reported $165.3 million net loss, with Noto explaining that this is due to one-time expenses, according to SoFi's CFO Chris Lapointe. This caused investors to sell their SoFi stocks, which caused them to plummet down to the $14 price at the time of recording this video. Short sellers are looking at the situation as if they have found a gold mine, and whether they are right or wrong, it is obvious in the hands of the mighty Noto and his royal committee to prove these idiots wrong. Hello and welcome to Wealth Gambit. Today we're going to talk about the price drop of SoFi stock and these short sellers taking advantage of the situation. And just to remind you, we're not financial advisors and this is not financial advice. Please hit that like and subscribe button and hit that notification bell, as we love to update you on anything and everything about the finance space. Let's get started. Remember when the Tesla shorts lost about $40 billion last year? Yeah, you're right. We're talking about the 743% gain, or for the short sellers, the 743% of pain caused by Elon Musk in the Tesla stock. Well, it looks like the SoFi short sellers definitely took some notes, because in terms of the short percentage of the float, it has dropped significantly, which we'll touch on later on in the video. From the highest $28.2 million in short interest in a 2-month period, it's now down to $13.7 million. Doing the math, it's a 42% decrease. So, are the short sellers retreating back now that they see the crystal clear growth of this stock? Before we head on, what exactly do these short sellers do? Short sellers basically borrow stock from brokers and sell it to people who will buy these stocks at market price in the hope that these stocks will further decrease in value and buy it back at a lower price and return them to the brokers. In other words, short sellers are basically betting on the failure of a company, getting profit by the leftover price when they get to buy their borrowed shares at a lower price. So what's causing the short selling? Let's put the spotlight on SoFi. Rapid decline in SoFi stock price following its lock-in period had these short sellers go merry-go-round in the past few months. And they have all the more reason to celebrate, as SoFi's stock price dropped even more after it reported its second quarter of 2021 result. Its stock price fell 10% a day after the second quarter results were out. But let's focus on SoFi. Here you can see the amount of short interest before and after it debuted on June 1st. You will see that this was a heavily shorted stock, but more than half of it later vanished in the first half of July. Tables have turned and the so-called overvalued stock is now going bullish. As Social Capital founder Polly Hapatia said, SoFi has the opportunity to completely transform the consumer financial services industry with its digital-first ecosystem of offering. So one reason for the decline is the lockup period expiration after going public. The shorts are taking advantage of the weakness. Now, as the lockup period expires, investors are trying to sell off, especially the early ones or the big-time shareholders who got restricted from selling their shares after June 1st. As these investors sold stocks sooner than expected, selling pressure has increased because there is more supply of shares in the market. This then caused a decline in price in 83% of the available shares in the last few days of June, which continued through July. So basically, the dive in prices from the high 20s was both from the pressure coming in from the early investor sales and the short sellers who took advantage of the scenario through dark pools who get to buy huge orders of shares in an inaccessible medium to the public. The problem with people who are investing their money is that they don't understand the economics of the fintech business a decade or two from now. As what the legendary Warren Buffett would say,
I have an old-fashioned belief that I can only should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now.
SoFi stock short seller might be having a toast and drinking wine at the moment, but that shouldn't be for long. Fintech companies are the future of financing, and we believe that SoFi holds the biggest spot in that industry. One sign that the short sellers could be leaving soon is the bank charter approval. One of SoFi's major moves is applying for the long-awaited bank charter. For the short sellers, they're probably hoping for it to be denied. But Anthony Noto is not the type to sit back and relax. He's putting his balls on the line and making sure he does whatever it takes to get it done. Noto, along with SoFi's dream team, will not not stop until the bank charter gets approved. SoFi is a diamond in the making, and we believe it's only a matter of time for their stock prices to skyrocket. They have done a 101% increase in their revenue. They have greatly increased their products and services both in just a period of 1 year, and they could probably do that with their stock price too. But what comes up must go down. What must go down must come up, and SoFi's only direction at this moment is going up. SoFi's members are growing each day. That would mean more people using their products and services, resulting in compounding revenue. Another sign that the short sellers could be leaving soon is the student loan forbearance expiration. One of SoFi's core lending products, which are the federal student loans, will now produce inflows for SoFi at the end of January 2022. This expiration of the forbearance period will continue the halted payments of students, and this revenue stream can definitely be one of SoFi's ways to get ahead of its competitors. For all of you short sellers out there, good luck. It's not too late to rethink your decisions, and we SoFi bulls appreciate you for lowering the price so we could load the boat. And that's all for today. We hope you enjoyed the video. We'd love to know how many shares you've bought since SoFi's price drop and how long you're willing to hold on to that in the comment section below. That's all for us, and until next time, peace.